My name is Joe Aston. I'm the Sales and Commercial Director at Aria Finance. We're one of the largest specialist brokerages in the UK. We transacted last year just over £500 million worth of specialist lending, and we operate across all sorts of product ranges and with a wide variety of lenders, specialist lenders, high street banks, challenger banks, privates, etc., etc. I'm delighted to be joined today by one of our sort of strategic partners, MT Finance, and the senior BDM for the London and the South East region, Joe Grace. So hi to Joe. The way this is going to work is we're going to have a little bit of information from Joe around MT Finance, their product offering, what's going on in the market right now from their side and how they're diversifying and moving forwards. And then hopefully we'll get into the last Q&A. I have a number of questions pre-sent in prior to the webinar, which is great. Some really good stuff to get our teeth into. But obviously there is a Q&A box enabled as well, a chat room. So please do feel free to ask any questions at any point and we will get to them at the end. In the meantime, I'm going to hand over to Joe to tell us a bit more about MT Finance. Joe, take it away.
Thank you, Joe. Morning, everyone. So as Joe said, my name is Joe Grace. I'm a senior BDM at MT Finance. A little bit about myself. So I've been there 6.5 years, which is quite a long journey for myself. You don't see many BDMs having stayed in the same place. I've kind of worked my way out through the ranks. Started as kind of a new business executive, so pretty fresh in that sense. I didn't even know what bridging loan was kind of when I started. Kind of worked my way through it, kind of mastered my craft, and here I am. And now I sell bridging finance. So it's a nice journey for me. A bit about us. So MT Finance. So we are a leading property finance lender. So we specialize in bridging loans and auction finance, I suppose, in short. So for us, we've been around since 2008. And we're very proud to kind of have assisted numerous property professionals, business owners, portfolio landlords, and kind of just individuals with their kind of finance requirements over the years. For us, and our big thing, our reputation is kind of delivering fit for purpose short-term loans. We're very good at what we do. You'll note that kind of most bridging lenders are required in the sense of speed, or they've got a fast approaching deadline. And we've kind of just been consistently, I suppose, recognized for delivering kind of in the financial services industry. So like I said, it started as a kind of short-term gap in the sense of obviously our bridging offering, mainly auctions. And then as time goes on, we've kind of introduced regulated bridging finance, which has been very successful. We now offer buy-to-let mortgages, and recently, we've just launched commercial mortgages. So we're doing very well. It's going very good, and the offering's just getting greater and greater. And we're very proud. We're very proud of kind of where we've come from. And I suppose for us, as we're kind of an asset-based lender, we don't really judge a loan application on credit history. You find most, if you were to go to a bank, you may well be declined if you've got a CCJ or you've missed a payment, or you might have a small default or a credit blip. Essentially with bridging, we really aren't as bothered as such with credit issues. For us, like I said, we're asset-based lenders, so we focus purely on the asset, lend on that basis, and obviously concentrate on a borrower's kind of future plans. And in doing so, that allows us to offer a greater range of flexibility to our clients. It kind of goes hand in hand in that respect. I kind of touched on, I suppose, speed. There is always an element of speed in bridging when a client needs kind of fast, flexible, stress-free, if you like, requirements. Obviously, we're here to do so and offer that, and we kind of pride ourselves on that deliverability. Just getting the finance requirements completed. Whether that's in a matter of days, we have been as quick as that. Especially recently, that we had a couple of deals that kind of flew through. But it's just finding ways to kind of cut through any delays that a bank may well have kind of a challenge with. And it's what we can do to kind of take a view on that as such. And a big thing for us as well is kind of transparency. There's no hidden costs. We don't charge any early repayment charges. There's no exit fees with us. And obviously we provide all your kind of pricing and information at the outset on our indicative terms. A lot of the time now we are kind of doing a bridging loan for whatever reason, whether that's business purposes, if someone's buying an additional buy-to-let property or an investment, if someone needs help to inject funds or capital into a business. The beauty now that we have buy-to-let mortgages and even commercial mortgages, we can actually exit ourselves in that sense. So we can kind of pre-underwrite at the bridge to know that we will exit onto a mortgage thereafter. So it's been great. It all goes hand in hand, and it's just that really great kind of journey for the client and that synergy from bridge to refinance. But yeah, like I said, we're very good at what we do. And yeah, I'm kind of excited to tell you a bit more about ourselves with the specific questions.
Brilliant. Okay, thanks, Ted. And look, from me, I mean, you as a firm, MT Finance are one of the biggest and longer established bridging lenders in the space. Why is it that people continue to use you, do you think? If you were pressed on it, what is it that makes you stand out that people like to deal with MT Finance?
I suppose for me, it's going to sound quite cliche, but we are very good at what we do. I think the property market has kind of, as you probably have seen, it's changed substantially over the last few years. Certainly in the 6 years that I've been in the bridging market and the bridging world. Obviously, we've kind of seen significant growth in terms of new lenders out there, especially unregulated lenders. Seems to be a new lender kind of every week. It seems that someone's heard of or someone's kind of got maybe family money or a certain funding line. But for me, and like I touched on it briefly just then, I think the main thing for us is, and why I could come back to us, is firstly our deliverability. So we want both, well, for us and the client to kind of maximize on any deal they have, and ultimately we want to deliver on what we've proposed, right? So I think for us, and you hear time and time again that perhaps a lender's changed the goalpost at the last minute, or something's cropped up that they're not happy about and they've kind of just declined the deal. I think for us, it's not in our DNA to do that, and we're very good at taking a common sense approach. Yes, there's an element of risk that may occur. Something might have come up on evaluation that we're not aware of, but it's right. What can we do to make that deal work? Are we comfortable to maybe take a view? Is there something we can maybe indemnify to progress the case? And yeah, I think that's one of the main things. And deliverability is just so necessary now, because there's a lot. You think, oh, a lender just needs the lender's there for a reason, right? And there's so many that don't kind of finish a loan or complete on a loan for whatever.
I think you're right. Yeah, I think that moving goalpost piece is a really accurate one, and you're right again that the bridging lending market is incredibly saturated. And I'm conscious that there might be some brokers who have joined us who haven't done much bridging or maybe haven't worked in MT Finance before, but that market is so saturated. There are a handful of really established larger bridging lenders where deliverability, you have a lot more buy-in, and you can have a lot more confidence in getting those loans through as they were quoted at day one, as they were agreed at day one, fighting to find a solution rather than a problem. And, you guys are very much a part of that market. So credit to you. But you mentioned what you were talking about, how you see quite a lot of auction purchase business. Now, for me as a broker, one of the things that we've seen as a firm and as a business, we did within our sort of makeup last year, we did just over 200 million of bridging. So this is a big area for us as well. And a huge amount of that, and one of the entries into bridging for consumers and borrowers who haven't borrowed it before, is auction finance and auction purchase, because a lot of people are now chasing yield where the buy-to-let market is tougher. So they're buying down to properties, doing them up, or trying to find a bargain. When someone goes to auction and they need a bridging loan for speed, how are you winning that business? What can you do that can help speed these transactions up? Because you mentioned speed before as well.
Yeah. So certainly towards the end of last year, we've introduced AVMs. So for those that don't know, so an AVM is an automated valuation model. That means essentially you would put the postcode and the address into a system, and it immediately gives you a valuation and a confidence level of that valuation. For us as a lender, if we're happy with that valuation and that confidence, essentially that you can rely on that valuation. So that you go straight to legals at that point. So you wouldn't be looking for a valuation report or anything like that. That's passed straight to legals. And then we've got a 21-point checklist. Once all that's satisfied, we hit the button and complete. So it just helps again with that speed element. Another point as well, which is quite a good one. Towards the start of last year, we introduced that if there had been any works to a property, as long as it was over a year, we could indemnify it on searches. Obviously, Joe, you've experienced this, searches can take a decade to get back, ages, and they kind of just put a halt to any kind of deal. So yeah, if you're doing an ADM and you've got search indemnity, they just kind of fly through. So it certainly helps with that speed and that kind of auction deadline.
Yeah, and you mentioned that there's some things are happening in as little as days rather than weeks, and we're seeing that too. And a number of the established bridging lenders are getting better at that. And again, you guys, I've seen your proposition enhance on that basis too. So it's great to be a part of. We'll come back to bridging, I think, but you're not just a bridging lender anymore. You back in 22, you diversified and launched buy to let. That was an awful market to launch it. At the back in Q4, the mini budget sort of starting and the mortgage crisis. But what makes you stand out for brokers to work with you on the buy-to-let side of today's market?
Sure. So like you said, yeah, 2022 was wild to release a buy-to-let mortgage and essentially become a provider for that. So obviously list trust didn't help. Obviously mortgage rates soared. Products become unavailable. Products weren't feasible as such. Obviously, we released with a rate covered whether it was back then, and then we had to increase it thereafter, and it just wasn't. We wasn't seeing business because it was just simply too expensive. I think the good news for that period, we didn't withdraw any products. We kind of stuck to our guns, and to be honest, we have seen some kind of fantastic originations during that time. And truthfully, we've gone kind of from strength to strength. And I think the main thing for us, there's a lot of lenders now that are kind of doing product transfers, and they're rewriting their loans for product transfers. I think the important thing to think about us, we've not had that period yet. We haven't had a loan book long enough to do any product transfers. So the business we're writing is all fresh originations. And again, like we're quite proud of that. But yeah, I think for us, where we step in as a specialist lender, just everything, like we see it day in and day out. Just nothing's black and white anymore. It's not just, oh, there's a buy-to-let opportunity for a house or a buy-to-let opportunity for a flat. You've got HMOs, you've got multi-unit freehold blocks, you've got student accommodation, you've got semi-commercial, you've got complex income structures from borrowers. You've got people trying to be clever around their tax, so they're creating all these different companies and these layers of structures, which banks aren't particularly happy to look at, and that's where the specialist kind of lenders come in that respect. I think for us, we do first time buyers and first time landlords, so we see quite a lot of that business. We look at properties above and adjacent commercial, which others don't really look at. In theory, subject to valuer's comments, we could really look at anything. We just want to see kind of positive comments around saleability and marketability. But look, that's where a specialist comes in. You've had to adapt, or certainly we've had to adapt and amend our offering to just help with these kind of clients and these landlords that are looking for those kind of avenues to move forward.
And a lot of landlords at the market. I mean, we've gone through as a country a cost of living crisis and some economic downturn. There's alongside that sort of running parallel with a market and a consumer retail space where you can take finance on anything, right? You can split the cost of a Chinese now over 3 months, which is insanity. But it creates more opportunity for good borrowers to have blips in their credit profile. How do you guys look at sort of mild adverse all the way up to sort of more serious adverse? Is that a market you guys still like on the term side too?
So bridging, we've always been very open in terms of credit profile. It's always been, like I said, based on assets. So regardless of if they've had a CCJ, they've got a default, they've missed a parking ticket, for example, or something like that. The strength has been in the asset. So you can take a view, especially if kind of the exit strategy to repay our loan is sale of an asset or sale of security. I mentioned DNA earlier, so we've tried to take that DNA onto buy-to-let, which we've done very well. Obviously, mortgages are a bit more stringent around criteria and policy, but we are very flexible in that respect. So in terms of credit, we're not looking for like a 500 and above score. For us, as long as the credit profile isn't tarnished with like missed payments of kind of like 3 and above. If they've got a score of say 300, but that's because they might have had one missed payment over a number of times, which would bring that score down. We're comfortable with that. So specifically with us, we're happy up to kind of 5,000 as a max on the CCJ, and 3 missed payments. We now have a tiered system in terms of credit. So we have a tier 1, which again, we can look at blips in credit that goes up to kind of 500 on CCJs and defaults, and up to a status 2 as a missed payment. And then we have tier 2, which is, like I said, the 5K CCJ default and 3 missed payments. And I think truthfully, 3 missed payments in this market, I think people are quite conscious of their credit in today's kind of world. So I think that's a really good offering to kind of support that market.
I think there's, to throw my thoughts in on the specialist lending space as well, the thing with credit and with anybody who has a blip in their profile, whether it's credit or something else, the beauty of a good specialist lender, and generally it takes it to be well packaged and understood at broker level as well. But I hop on a lot whenever I sort of do public speaking about the fact that we all live and operate in the grey. And, you guys are a great lender for that, where actually you might have a criteria checklist that has, we need X, Y, Z to do a deal. But if high net worth or a great asset, great borrower who happens to have a large CCJ because they're contesting it, so it's accruing, but they have the money in their account, and it's not an affordability problem, it's a principal problem. Actually, can we take a view on that side of scenario? Maybe the beauty of a good specialist lender and the specialist challenger banks as well is that, you can present a borrower and a deal correctly. And, good broking as advice to anybody as well watching is getting ahead of those problems and taking them to the lender. Don't let the lender find them. Finding the issue first, try and find a risk mitigant so that you can present your solution already, and they can go from there. And I think that's always a really good, and again, you guys are very good for that. So I think there's a reason why that term product is working in a competitive landscape as well, right?
Yeah, exactly. And I think, like you said, if you package it well, make it make sense to us, tell us the risks, tell us the positives. If we can get comfortable as a lender, then yeah, why not? Why would we not do the deal as such?
Agreed. Yeah, it's a good attitude towards lending. Common sense lending, dare I say, is the sort of name of the game. We've got a question, but I'm going to just very quickly, because we talked about your diversification into buy-to-let term lending. You have very recently, very, very recently, launched into commercial lending as well. So what was the driver behind that, and where have you guys positioned yourself in the market for commercial term lending?
Yeah. So the guys have been for a while, have kind of looked and saw a gap in that commercial lending market. Especially between kind of like your challenger banks and you have kind of your overly expensive lenders that like are a last resort. And truthfully, there wasn't really a provider in between. And that's where we think we're going to strive. So you've got kind of challenger banks here, the most expensive that will do anything, and we're going to sit right here, right in the middle of that. And yeah, I think and what we see as well is like kind of the high streets remain kind of strict, and their responsibility often falls kind of out of line with that strictness. Is for us like specialist lenders to kind of pick that up. And yeah, we're kind of taking where we've been on buy-to-let, and we're doing very well in that space, and still are bridging, and just take that service and just push that into commercial mortgages. So the product is fantastic. In terms of what we will look at in terms of asset is really good. So it's quite a wide range. So we're now offering like a standard commercial mortgage range, which would be kind of offices, retail, industrial, even nurseries falls under that, which is quite cool. And then you've got like kind of your super specialist products, which would be, I don't know, nightclubs, bars, energy. So you could have like a wind turbine farm essentially that we could look at, which is just crazy really in terms of blended. But I think again the main differentiators for that product and where we're going to stand out is we're looking at first time investor on a commercial mortgage, which is really quite cool. So,
and are you looking for them to have a residential investment background to get it in there?
Not necessarily. Again, that's something we could look at. So you could look at first time landlord, first time investor. Which is very strong.
Yes.
Obviously, Yeah, dependent on the strength of the lease. Obviously, I know with most deals and commercial mortgages, the strength is in the lease, and who's going to be obviously in there as a tenant. Um, but yeah, we'd be looking at that. We're also doing care homes as well, which is quite cool.
Yeah,
They do.
good. Yeah, a lot of actually at the moment, a lot of good business to be done there. With having a commercial and a residential term product, obviously the middle ground is semi-commercial. What are and a lot of banks and lenders treat sort of semi-commercial differently in how they define that. What's your definition of when it ticks into commercial versus semi-commercial?
Yeah, so for us, our semi-commercial is residential element and commercial property below. The good thing about us and where we stand out from other lenders is typically you'd want kind of a 60-40 split in terms of, well, most look at in the favor of residential. So 60 residential, 40 commercial. For us, because we have now had the commercial pot to dip into, we're actually looking at 60 in favor of commercial.
So you can look at a semi-commercial product if it is 60% commercial assets.
Right.
Yeah, great. Yeah, good. That's really good to know and good for people to understand because that is fairly unique.
Yeah, and even if it's like I said, if it was the 60-40 in that scenario, we can actually look at a maximum of 80% as resi. So even if it was like an 80-20, again, that would still be fine. So for us as well, so previously when we did launch in 2022, the Semicom was on its own kind of product. Sorry, it wasn't just, sorry, semi-commercial was on a product with all the buy-to-let. It's now on its own product. So, and in doing so, we've actually launched a full semi-commercial offering. Annoyingly, previously, we could only look at the residential elements, which was good if you say had a HMO above a shop, something that would have a high yield. It's obviously assist the rents, but now we're actually looking at the commercial, and it's on its own product. So that's really good.
Yeah,
and yeah, the rates are pretty good for the 5-year on that. So it's quite competitive in that sense. But yeah, I think that's for me the initial kind of main USP that's been released on that is that 60-40 in favor of commercial.
Yeah, okay. That makes sense. And there's a question around it. It's one that I can answer quite easily, actually. There's a question that's come in that says, what's your referral process for HMO? Well, the good news is that actually after the webinar, everybody that's here and signed up will be getting an email from myself with both mine and Joe's contact details on and a really clear, defined process for referring cases over if you have anything that you want Empty Finance to look at as well. So that'll be with you not long after the webinar. There's another question that was sent in beforehand. And it was a question about what's a perfect case for Empty Finance. So what documents or information should we as brokers always provide up front to give the case the best chance of a fast turnaround? Well, what stands out to you as a golden case?
I think the main things are literally for anyone who's kind of putting a case together, just get as much info as possible up front. That doesn't necessarily all have to come to us, but at least for you guys, it gives you a whole clear understanding of the case up front. And then if there is anything that kind of you think, oh, that I might need to mention that, at least we know from the get-go. And if it is something we can take a view on, then by all means, I think especially with the term stuff, if it is credit or if there is like possible, you think something's wrong with the income possibly, obviously let us know. But we're kind of looking for DDMs and declarations, income evidence in the form of kind of tax returns and pay slips, deposit if applicable, AST again if applicable. If there isn't an AST in place, again, we can proceed. It will just be, we lend on the basis of whatever the valuer confirms the rental to be. I don't know, memo of sale, buy-to-let portfolio, solicitors details, all that kind of stuff. This is kind of specifically for mortgages. For bridging, like I said, it's just anything that you think we need to understand from the get-go. It just really, really helps. So that's what I'd say, to be honest.
Yeah, okay, that's a great answer and good to know sort of what good looks like. There's another question that I think is a brilliant one, and it's really good for brokers who are looking to get into specialist lending and actually who are borrowers asking for these type of products if you haven't engaged with them before. But with property investors becoming more cautious in the market, and obviously I sort of referenced earlier chasing greater yield, what type of transactions are you seeing that you're picking up that might show any emerging niches brokers could be aware of?
I think right now, I personally seem to quote a lot on regulated. So I think chain breaks become more apparent more so. I and we're very good at that. We do a fair bit of kind of regulated transactions.
And if I can just jump in there, that actually for a good residential mortgage broker is a great opportunity, because if you've spent 2-3 months lining up a residential mortgage for a family moving home, and someone further down their chain from no fault of their own falls through, or their seller pulls out, this, my view as well as broker for those watching, in light of consumer duty, a great customer outcome is being able to offer them a short-term product that can still save that transaction for them. And whether they take it or not is sort of by the by, but residential home movers, there's a sentimental value to that, where they've often walked around the house several times, their kids have picked their bedrooms. Once you're attached to a property, you're attached. And chain break bridging, where the loan is leveraged against your property you're selling and the property you're purchasing, can be a great short-term option to see that purchase through whilst your sale then continues. So it's interesting to hear that you're seeing more and more of that, Joe. Is that taking up a lot of your work at the minute?
I feel like, yeah, probably 60-40 I'm quoting on regulated transactions. But yeah, you just find, I feel like you find the borrowers more motivated. As you say, they found their dream home. They have to buy it. And I think for brokers that aren't really aware of bridging or just do the resi stuff, I think for them, it's just like, oh, the chain broke. That's it. Sorry, that I can't help you. But there's always a solution. And yeah, that's where bridging, especially on the regulated side, steps in that front. For that, I'd say more on bridging, but yeah, still everyone's kind of looking at HMO still. I still think it's very good. People are looking at obviously the yields in that respect. And I think like even like the UK, you're kind of like born and told that property is a good investment. I don't know about you. I just feel like, yeah, between my friends and family, when you're at school, it's just like, oh, buy property as soon as you can, buy property. So I feel like always people want to get on the ladder, and whether that's if, I don't know, mum and dad are trying to get son or daughter on the property ladder, even a move investment. And I think that's another kind of standout point for us, actually. We can look at first-time buyers, first-time landlords, as I mentioned, but we can actually do that in scenarios for HMO and semi-commercial. So we just want one of the applicants to have a year's experience in property, which is very good. So we have done, I suppose, first-time buyer, first-time landlord on a HMO, where dad come on the product because he had the experience. And yeah, it's just getting people on that ladder sooner, and especially with securities that aren't kind of vanilla as such. So it's a great offering in that respect.
Yeah, that's good. And look, actually, it's a great sort of note to end on, because I agree with you. People are still buying properties. It's seen as a good career and a good income stream still. And what is happening is accidental landlords are exiting the market, and the rise of the professional landlord is happening in the background. People who are ambitious and taking it seriously. And what that leads to is greater lending options. There's appetite in the market. There's liquidity. People want to support those borrowers. And if you as a broker are looking to diversify into specialist firms and support your existing back book and new borrowers coming to you, new clients in their onward acquisitions and their sort of journey through property, do talk to a business like ours in the specialist space that can help you place those deals and see them through. And you will be talking to lenders like Empty Finance and big established specialist lenders who, have deep pockets and the right attitude and longevity in the space to support those borrowers. So it's a great market for that. Thank you so much for joining us, Joe, and telling us a bit more about MT and some of the business that you're seeing. Appreciate everyone coming on as well. We'll be sharing clips of this in the coming weeks. And as I say, we'll get an email out to everybody with contact details to follow up. But thank you again. Enjoy the rest of your Tuesday, and enjoy the heat that's still knocking around in the coming weeks. And hopefully we'll hear from you all soon. Thanks again, Joe. Thanks, guys.
Thank you. Yeah. Thank you for your time, guys.